Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. And as I speak to all of you all this Monday morning at about 10 o'clock, markets have reacted to what has happened overnight, especially early yesterday morning. US jumping into the fire, which was uh, already ignited between Israel and Iran. And as an outcome of that, we've seen all global markets this morning, especially the Asian markets and Indian markets. European and US markets will open up later on into the day, but Asian markets and Indian markets have started with deep red. Some amount of recovery from lower levels as I speak to all of you on this Monday morning, around about 10 o'clock. But I think the situation looks to be a little bit grim in terms of not able to ascertain what is going to be the outcome, at least in the near future. But I think what has happened yesterday and what is likely to happen in the near future will definitely guide the markets all across the globe, including developed markets, emerging markets, Asian markets, and our markets. The problem with this kind of geopolitical uncertainty is taking any kind of direction for the markets. It's extremely difficult, virtually impossible. So hence we'll have to react as and when the news flows break in front of us, and how serious the impact is of that news flow is something that we'll have to wait and watch. But in the meantime, crude oil prices have taken a turn for the worst to virtually 5 months high on Brent and NYMEX, elevated levels, and there is also news flows of Iran possibly, of course, it is not confirmed now, but they are thinking of closing the Strait of Hormuz, which will lead to squeezing of global crude oil and natural gas supply, and that will eventually have its own impact on the global crude oil and natural gas prices. But it will be counter unproductive also for Iran because 80% of Iranian oil and natural gas is shipped to China, then China will also have its own difficulty. So this is a tricky situation, at least in the immediate short to medium term. But in the past, whenever these kind of situations have evolved, they do take an impact on the global markets. But then markets starts to stabilize once we have a little bit of clarity. So uh, our understanding is that in this week we may have some kind of uh, positive news in terms of no further escalation and some kind of peace is what one can expect. Of course, the statements are much different to what the expectation is, but one can definitely possibly look at that. But it can immediately have its own impact. Now, about Indian markets, if I have to reflect upon in the past, these kind of geopolitical situation, of course, including pandemic like COVID, Indian markets have been able to stabilize much earlier, and thereafter stabilizing, the markets have been able to recover also to a great extent. A lot depends, unfortunately, what we saw on Friday was a thumbs up from the global markets with the announcement of 2 week window from President Trump, and then suddenly on Sunday early morning, US goes and attacks three nuclear facilities in Iran, and then of course the unpleasant war of words and statements from all three sides. So this is a tricky situation. But having said that, Indian markets always recover, stabilize and recover much sooner rather than later. So we expect the same kind of recovery. And the reason why I say this, friends, is that the domestic data points are very supportive, whether it is to do with the government policy or RBI policy. Both are in line, and they are likely to have a huge positive impact as far as the Indian economy is concerned, corporate earnings is concerned, and of course the GDP growth is concerned. It's a different point that crude oil prices on the higher side could lead to an elevated inflation level. But mind you, friends, India has been by and large buying crude oil from US and Russia. From West Asia, there is a very small quantity that comes into the Indian markets as far as natural gas and crude oil prices are concerned. So let's hope that this is positive from that point of view. In this kind of a situation, what one needs to do, especially with the geopolitical tension, I think it will be prudent for investors to look at sectors which are relatively insulated from what happens across the globe, sectors which are predominantly driven by domestic policies, by domestic news flows, and by domestic consumption story, and of course, earnings visibility and uh, stronger business outlook. So if I have to put up things in perspective, then the sectors that one should look at is the first one is of course banking and finance, especially after the government policy, I beg your pardon, RBI credit policy. Then capital goods engineering, defense, power generation companies, cement as a sectorial thing, telecom, cellular service providers, and FMCG. FMCG will possibly have two parts of it. One is FMCG discretionary and non-discretionary. So one can have a broader kind of an outlook with this kind of a strategy in place. Those who are a little bit more risk, uh, more risk if they can take more risk, then I think sectors which are dependent on export related also, like for example, IT, pharma, uh, to certain extent, autos is something that one can definitely look at. But there are, I think, a lot of themes depending upon the domestic growth story, domestic triggers, insulated from the external news flows, shocks with respect to geopolitical situation. So we have two investment ideas, friends, as always. First one is, of course, a stock which we've been recommending. We spoke about it in the month of May also, when the markets were down and out. We recommended this stock earlier in the month of April also, when the markets were witnessing selling pressure from the FIs. We spoke about this stock. The stock is BEL, Bharat Electronics Limited. The reason why we need to speak about this stock again, because we have our research team has revised the target price upwards for BLS in excess of 440 plus. This is the first recommendation. The second recommendation is more again from the domestic industrial play, power and industrial play. The company is called CG Power and Industrial, small cap or mid cap capital goods engineering company, primary into industrial electronics and peripherals and power equipments. Uh, Expect the earning visibility to be extremely strong given the domestic order book, and of course execution of the order book will translate into much more better levels. So two investment ideas from a long term point of view, our research team, BEL, Bharat Electronics Limited, and CG Power and Industrial. Mind you, friends, these are long term investment ideas, so you need to have a longish time horizon, disciplined approach in terms of investment, phased out manner, start at current levels, and then possibly buy on dips would be a prudent strategy. And of course, prudent to give a disclosure over here. These recommendations are our research team's views. Our company Geojit or we do not have any investment idea or any financial interest or any conflict of interest. However, we give similar recommendations to our clients. They might have their investment interest in the stocks that have been recommended. Thank you very much for your patience, hearing. I'll see you again next week. Till then, take care. Bye bye.